The Dow traded off heavily and hard on the open because of the news out of Europe that I guess it was run on banks somewhere. But as the day progressed, immediately, I say the morning progressed, you could see the buying coming in to where the Dow came up to where it was only off 20 points or so during the day, and then faded a little bit on the close. However, as we can see, we've got a hanging man. Stochastic's just starting to turn over, but we haven't closed below the T-line yet. We might see some rocky trading here for a little bit, but until we see it close below the T-line, we got to consider we're still in an uptrend. And this is the difference between different chart systems. The S&P 500 on this chart looked like it opened higher and traded positive, which basically tells you the knee-jerk reaction, panic selling on the open, was then followed by buying in the afternoon or later part of the day. Same scenario with the NASDAQ. It opened way down here, but during the day it was trading positive from where it opened. Now, that has a different connotation than what most people will be looking at when they see the market. The NASDAQ was down 11.5 points today. That seems kind of bearish to most people. However, if we're looking at it from the viewpoint that they opened it much lower and brought it back up so it was only off 11.5 points, we have a completely different perspective of what we should be looking for following this signal. Closed right on the T-line. It needs to open positive and start trading positive to tell us that the T-line is still acting as support. If it opens lower, it tells us they're more than likely going to take it down further. This is why the chart patterns that work or are in progress seem to have more strength. We recommended Swift SWFT today, and would have bought it when it started going positive. Notice it opened right on the T-line, kind of flubbed around a little bit, but started coming back in above this high of the candle that told us that the bulls were possibly taking control. They opened it today on the right on the T-line, flubbered it around a little bit, but then started trading positive. This is a good indication that this whole big rounded bottom is still in progress, and we could possibly see much higher prices. And simple, logical entry strategies allows a candlestick investor to stay out of trades that aren't good. For example, we recommended HERO for today had it open positive because that would have told us the bulls were still there. When they gapped it down from where they closed it on Friday and started trading it lower, that told us exactly what we wanted to know, that the buyers weren't there. This trade did not execute. There's common sense built into every candlestick signal and pattern. It's just learning what that common sense result should be, and you'll have a much more firm understanding of why prices move. That'll be it. Let's see you in the chat rooms.